The budget has been presented and expectations have been met to a large extent, but now to understand the fine print and the impact, we have a wonderful interaction here with the two secretaries of the Finance Ministry, Financial Services Secretary Hasmukh Adhia and Disinvestment Secretary Aradhana Jory. Also joining me, my colleague Hina Gambhir. Thank you both for being with us. Let me start by asking you, Mr. Adhia, a lot there for the financial services overall, banking sector reforms, new banks like the Mudra Bank being announced, plenty new schemes which really impact the common man. Share with us some of the big details that have emerged from the budget.
Well, I would say that one of the big things in this budget is that there are a lot of new schemes announced for insurance, pension, etc. Now, that's where the common man is affected. The first thing is that India doesn't have very good insurance penetration.
Right.
As of today, we have got 19 crore people who are having some sort of accidental death insurance, and mostly these are group schemes. The rest of the population is not covered by any form of insurance. And we have got some people who are covered by life insurance also. Now, the government's aim is that the poor people should also be having some sort of an insurance cover. So that's why we have got two important schemes, one for the accidental death insurance and one for the life insurance. The accidental death insurance policy will be only available for 12 rupees, and that will be through a process of simply giving a letter to bank account to the bank manager that I want to join this scheme, and he will be in the scheme. His amount will be automatically auto-deducted from his account, auto-debited.
What kind of coverage are you expecting this would get?
We are expecting crores of people to join this scheme because it is so cheap. 1 rupee per month is not a thing.
Right.
By khuda na khasta kuch agar ho gaya, suppose something happens, then you get a 2 lakh rupee sum, you know, the family is saved because of that. And similarly for natural death insurance, life insurance also, we have got a product which is available for 330 rupees only. Again, through the process of auto debit, you have to simply give an application to your bank that I want to join this scheme, and you are in it. You have to give the name of your nominee and you are in it. And you get a cover of 2 lakh rupees. By chance, if the family doesn't want to continue with the scheme next year, they may not pay next year, and the scheme is automatically discontinued.
The entry and the exit into the scheme is so easy that it will actually automatically lead to I'm going to talk to you more about the non-government provident funds, the superannuation funds and the new investment pattern you've introduced. But a quick word from you, Ms. Jory, on the disinvestment number. You know, we've been talking to a number of people within corporate India, and the one thing that they always see as being a bit of a disappointment, and I know you would disagree, from this government has been the inability to meet the disinvestment target this year. Share with us what is the number, the target for next year, and whether you'll be able to meet the target with the current fiscal.
You know, first of all, I would really disagree regarding disappointment with the target this year, the achievement, because if you see, this year has been the highest achievement of any year so far since 2000.
But still half of the target.
In fact, you know, I was calculating between 2000 and 2014, the average disinvestment was around 9,500 crores a year. And this year we did more than 24,000 crores.
But ma'am, at the same time, the stock market returns in the last 1 year have been fantastic. We're talking about over 30% returns.
But you know,
what better time to disinvest than this?
I'm so glad you asked this question, because you know, a general should be disaggregated to really understand the specific. You know, till last year we had an annual plan. We approved certain stocks. They were highlighted by the media and everybody, and the market beat them down and hammered them down.
Right.
So where the market was booming, the stocks which were going to be sold had overhang, and the market was selling them short, and the stocks were really trading far below their actual value. So therefore, at that point, I mean, our disinvestment doesn't mean that you do not sell stocks for their real worth. And we made sure you can't sell them for dross, you know.
Are you saying that they've been hammered so badly that it will be almost impossible for you to go forward with those disinvestment targets in this fiscal? I'm talking about this fiscal.
No, I'm not saying that. What I'm saying is, therefore, we did a mid-course correction.
Right.
We moved from the system of annual plans to a rolling plan. And now we have a system of trying to fast-track as many approvals as we can. And I've got a whole lot of approvals in my kitty. And completing, may I just complete a moment? Completing the process and looking at the market, whenever the market is right, just do it. For example, in December, the market was expecting Coal India or ONGC, and we did sale.
Right.
And we got a good price. Similarly, in January, The market is expecting PFC and REC, and we surprised them with Coal India.
Right.
So whatever,
so more surprises coming our
whatever premium, whatever money had to be laid, we would could place on the table at the time of this investment.
Okay.
And an issue as large as 22,000 crore
So
plus
that has been a fantastic
has never
issue
been handled in a single day.
we also
In a single day, and also that day, what happened to the market? People pulled out their money from everywhere else and put it in the stock.
Coal India. But a quick word from you on what's the number you will achieve in this financial year?
This existing financial year?
Exactly.
The existing financial year, the remaining part of it, we look to where the fiscal deficit is.
No, but fiscal deficit 4.1, he's saying will be met, but you're saying so there is no need to disinvest further in this fiscal. You're okay with the 24,000.
You can understand what I said.
Okay,
So
we've got
we also, I would like to just intervene here. We
Should
understand
the
that in the
government need the
last.
funds, we'll disinvest.
In the last 4 months itself, because we know when you took over, that time nothing was done. And last time, when I remember, when I interviewed the previous disinvestment secretary, so we were given this sort of a confidence, the way markets were shooting at that point in time. We were said that we are not only going to meet the target, we are going to even cross the target. But in your 4 months, you could at least turn the tables completely from, a criticism earlier coming in that how will the government even meet the target? You gave us the highest ever disinvestment receipts. So what's going to be the now plan ahead? As in, are you really going to be focusing on disinvestments in the last quarter itself, the way it was done earlier? Because we remember you also talking about some sort of a change in the strategy in terms of disinvestment going ahead from here on.
Really, the strategy is always for the disinvestment department is that it's at the nth hour. There's a rush just when the fiscal is ending, and that's when you go ahead and try to do something. So will there be a fresh approach for next year?
Absolutely. I certainly think that a robust strategy would be that which would be disinvestment throughout the year. You look at the market, and that's exactly what we've done. We've actually fast-tracked so many approvals, and we've got a robust pipeline now. We don't have to wait for the fiscal to end. In fact, it's a rolling plan. That's why you said the question, how many more this fiscal year? That's not so relevant for us. What's relevant is we keep it moving. Of course, a constraint would be how much depth the market has, how much the market can take. But on the supply side, we are quite set.
Well, why is it that you say that the fiscal deficit target, is disinvestment a major theme and an agenda for the government, or is it only to meet the fiscal deficit target?
No, the point I'm making is that a fiscal year is not so meaningful. We have a pipeline, and we'll continue. In fact, your question itself, we continue as we can do. We get our approvals in place, so our supply side is not a constraint anymore.
Mr. Adya, of course, very, very important banking reform initiatives announced in the budget. The Mudra Bank particularly, also a new investment pattern, something which is really going to impact people at large. Share with us details of the rationale and how it's going to really have an impact.
Well, as far as Mudra Bank is concerned, the entire concept is that so far we have been funding only the corporate sector. And in the last 22 years, 58 lakh crores of funding has gone into corporate sector. But what is the performance in terms of employment? We have been able to create only 22 lakh employment. As against that, we have got 5.7 crore own account enterprise, what we call self-businesses, mostly run by one entrepreneur or two people at the most. Now, these are the people who have got only 4% of financing from the institutional sources. The total investment in 5.7 crore is only 11 lakh crore. 5.7 crore enterprises have got a capital of only 11 lakh crore. If we enhance it, then they will really be able to become the vehicles of giving employment. So we want to create more employment in the economy, and that's why this is the sector we are looking at now. There will be a specialized bank called Mudra Bank, which will promote more finances going into this informal sector, and that also without any mortgage, so that more entrepreneurs also can be created, more funding can go to them, they can expand their business, and they could create more employment.
Right. Mr. Adya, another big decision that came out in this particular budget was about the Bank Board Bureau, an idea which was first initiated and talked about in Gyan Sangam in Pune, where we all heard, this new idea being talked about. Give us a sense of how exactly this Bank Board Bureau going to be working around. How will it help the public sector banks in particular, especially in terms of taking their efficiency to a different level, matching it up with the private sector, and how soon do we see that becoming a reality?
Well, it's going to become a reality very soon. Now that it is announced, we already sent a proposal to the appointment committee of cabinet to get approval. Now the idea is very simple. There is a government as the owner and there are the banks. Now government may not have the right kind of professional ability to supervise the banks as the owner. So we want to put in place a mechanism which is in between, which is called a bank board bureau. It is a bureau of 6 people in which the only government officer will be the secretary DFS. The rest 5 would be all professionals from the field. And the chairman will necessarily be a banker, and there will be 2 more bankers at least. And the remaining 2 could be experts from any other field. There could be a management expert or an accounting expert or whatever. But 3 bankers will have to be there, including chairman. Now, this bank board bureau will take over the function of appointment of full-time directors in the board, including the managing director, and also the function of selection of non-official directors for the bank boards. Now, we need to strengthen the governance of public sector banks, and that's why this mechanism is being created. So, basically, the entire appointment process they will also be supervising the strategic plans of banks, and they'll be guiding the banks in terms of strategies also. So they can nudge the bank to say that, all right, 2 of you are not doing well, why don't you marry with each other, why don't you consolidate?
That's a very
so those kind of
idea.
advice will be coming from Bank Board Bureau.
But you know, talking about your NPAs in particular, in the 3rd quarter specifically, all the public sector banks reported very high level of NPAs. What is really now going to be government's approach or banking division's approach to help the banks actually curb them? Because nothing as far as DRTs, the number which was announced last year, being talked about last year, nothing really of that sort came in this particular budget.
Is there anything in the budget which can actually give us the assurance that yes, we will not see a repeat of what we've seen happen so far with regard to the situation of bad loans, the NPAs?
Well, bad loans is a past legacy, and it has got number of factors which were responsible for it, including permissions not being available in time for infrastructure projects, the fuel linkage is not being tied up, some legal cases of coal mines, etc. So these are the reasons why we have got highest amount of NPAs in infrastructure sector, particularly power, roads, etc., shipping and all those. Now the question is ki this is not likely to happen in future. We are sure that the banks, this is a legacy, this will be over after some time. But then now onward, we have been advising banks to sort of be prudent in all their lending portfolio, and I'm sure they'll do it. You know.
Okay, last word to Aradhana Johari here. 69,500, the target for next financial year. Can you give a commitment that you're going to exceed it or meet it, and by when?
You know, as I mentioned, the supply side we can take care of. We are fast tracking our approvals. In fact, we've got a very robust pipeline right now, and even now the process is on. But to my mind, the constraint is going to be on the demand side, the depth of the market. So we will see as the market gives an opportunity, we will be disinvesting all the year round. I can certainly give an assurance that our disinvestments will not be bunched at the last. They will continue throughout the year.
All right, there's an assurance. I think they have to leave, so we're going to just let you go. Thank you so much, both of you, Mr. Adhia and Ms. Johari, for joining us and sharing your perspective. As you can see, there's an assurance coming of fast-tracking banking sector reforms, and the Disinvestment Secretary there saying, yes, the target will be met, of course, depending on the depth of the market, and that it will not be left to the last quarter of the financial year, as is always. Thank you both for joining us.
Thank you.